People love to repeat one simple idea: a mortgage is good debt. It sounds responsible, mature, even intelligent. It's advice passed down by parents, repeated by banks, and reinforced by society as a symbol of success. But in 2026, that phrase hides a reality most homeowners feel deep down but rarely say out loud. For millions of people, a mortgage is no longer a tool for freedom. It has quietly become a long-term financial trap. The concept of good debt was created in a very different economic world. Home prices were lower relative to income. Interest rates were manageable. Wages generally rose alongside productivity. Living costs didn't explode every year. In that environment, buying a home often meant building wealth with tolerable risk. A mortgage made sense because the math worked. But today, the same advice is being applied to completely different conditions, and the results are no longer the same. The first major problem is interest. What used to feel like a background cost has become a dominant force in personal finances. In 2026, many new homeowners will pay staggering amounts of interest over the life of their loan. In some cases, the total interest paid will approach or even exceed the original purchase price of the home. That means you're effectively buying the same house twice. This isn't leverage working in your favor. It's a slow, guaranteed transfer of future income away from you. What makes this worse is how invisible interest feels month to month. The payment becomes normal. The number blends into your routine. But over decades, those small, normal payments quietly reshape your financial future. Money that could have gone into investments, businesses, or skills instead disappears into interest. The second issue is home equity, which is often misunderstood. Rising home prices make people feel wealthy. They check an online estimate and feel proud. On paper, their net worth is growing. But equity is not cash. You can't spend it without borrowing against your home, refinancing, or selling. And each of those options comes with fees, risks, and limitations. Even worse, selling doesn't automatically unlock freedom. If you sell, you still need somewhere to live. And in a high-price market, you're likely buying another expensive home. So the wealth feels real until the moment you actually need it. Then it turns out to be slow, restricted, and costly to access. That's not financial security. That's a liquid comfort. The third and most underestimated cost is opportunity. A mortgage doesn't just take money every month. It takes flexibility. Career changes become scarier because the payment doesn't care about your job satisfaction. Starting a business feels reckless because your fixed expenses are locked in. Moving to a better city or country suddenly involves massive friction, selling costs, and uncertainty. Over time, the mortgage quietly starts making decisions for you. Not loudly, not directly, but consistently. You stay in jobs you don't like longer than you should. You avoid risks that could improve your life. You delay change because stability feels safer than possibility. That's a hidden cost no lender ever mentions. This is the part you never see in mortgage ads. A mortgage is not just a financial product. It's a lifestyle commitment. You're not only agreeing to buy a home. You're agreeing to organize your life around a fixed payment for 20 or 30 years. In an unstable economy, locking your lifestyle into a decades-long obligation is far riskier than most people admit. This doesn't mean owning a home is always a bad decision. It means automatic home ownership is. The real danger is assuming all mortgages are good debt without questioning the trade-offs. Smart decisions come from asking uncomfortable questions before signing. What happens if income drops for a year? How much stress does this payment add to daily life? Does this mortgage expand future options or quietly eliminate them? Sometimes flexibility is more valuable than ownership. Sometimes renting preserves freedom. Sometimes smaller and boring beats impressive and fragile. A mortgage should serve your life, not dominate it. The goal isn't the biggest house or the fastest approval. The goal is breathing room. So here's the uncomfortable reality. Good debt depends on context. In 2026, interest is a major cost, not a minor one. Equity often fails when you need it most. Opportunity cost shapes your life more than you expect. And flexibility has become one of the most valuable financial assets of all. If this perspective made you pause, that's a good thing. The most dangerous financial decisions are the ones we stop questioning. So ask yourself honestly, does your mortgage give you freedom, or does it quietly apply pressure every single month?